Okay, welcome everyone. We'll start our first lesson, and we are starting new unit 1, financial accounting 1. My name is Anjum Sathar and my email address anjum@ukversity.co.uk. And this course is ATHE level 4 extended diploma in accounting. Please, if you have any question, if you're listening this recording, please drop me email on my email address anjum@ukversity.co.uk. So let's see, before starting our lesson, we'll look our course content, what we're supposed to do under this unit, this module, what we're supposed to learn. So let's please. So the aim of this unit 1, is to develop financial reporting skill, how we can report, how we can manage day-to-day finance and the financial needs of small medium enterprise organization, like the sole trader partnership. We can look around companies, private limited company, not big but the small medium scales, which is turnover around 250,000 pound in a year. So today focus will be, so first learning outcome. Today we'll go through understand the regulatory framework for financial reporting. So financial reporting uh, framework, why we need to report, how our reports or the financial statement need to be look like. So that will be focus in our discussion. We have three assessment criteria under LO1, which we'll go through, and if you want to work towards merit, so one assessment criteria further. So total 4 assessment criteria we'll discuss. We have 3 learning outcome, and which we will try to be covered in 3 lessons. We have a inductive content, what we supposed to be learned, please, under each learning outcome. So today lesson will go through our first inductive content, which is given under learning outcome 1, outline, explain, assess the purpose of accounting standard. Why is a standard? Think about standard. If you don't have a standard, you don't have a start and finish date, you don't have a particular standard operating procedure in an organization, or you don't have a roadmap, so you don't know which way you go. It's a set nav. Yes, it's provide how we can record the financial information, what goes in under asset, what will be assets value, what come in financial statement first. So all this will be focusing. So for the sake of your knowledge, a financial statement we prepare under International Accounting Standard 1, which show the presentation and preparation of the financial statement, how we can present, how we can prepare, and always financial statement should provide the true and fair information to our user. So which we'll go through. IFRS is called International Financial Reporting Standard for small, medium, and enterprise. ISAB is called International Accounting Standard Board, which set the standard. Then we'll go through accounting concept, prudence, anything which we can prove should be recorded in the financial. So think about, due to the coronavirus, and we know this is the world, a lot of people will be default. So we need to be reflect in our financial statement how much we have a bad debt, the people will be default, which we're not going to get. So we should provide the true information to our user. Consistency. Financial statements should be consistent. Going concern mean the business will carry on as a normal. Materiality means significant. Any material transaction should be showed in our financial statement. Matching and money, all the financial statement accrual basis we prepare. So it means income and expenditures of each year should be recorded in the year when it's happened, not on the basis of the cash when we receive the cash, which I'll go through some example, like such as DSF, SOFAs, they had normally promote buy now and pay in 5 years. So we should record the sale this year and the related expenses to sale this year, and the cash we can receive in 5 years. Money measurement. Money measurement mean the money we are receiving, and we should need to be measured in all the transaction in the monetary term. Realization is mean the asset need to be realized, revalued according to that. Think about if you have a Windows 98 CD in your warehouse, what will be value now? Is it the same value Windows 98? No, it won't be. So we need to be look around. Should record the transaction and true value. Okay, accounting principle, relevance. Relevance mean accounting principle need to be all the relevant information should be recorded in the financial statement. Reliability, yes, we need to rely on the financial. How much is the reliability, comparability, and understandability? All we'll discuss today lesson. Anybody any question? Okay, yes, we'll start our lesson now. So as I mentioned, my name is Anjum Satar and my email address anjum@ukversity.co.uk. If you have any question, please drop me email. So today lesson we have in assessment criteria for key command verb. It's good to know what is meant by these. Explain. If somebody say to you, explain the thing, you should give account of purpose or the reason why this is happening. What is the purpose of accounting? Why we need accounting? Accounting need a business to record the business transaction systematically ways, and we should interpret the information to make decision. It's a legal requirement as well to record the transaction, to prepare the financial statement. Analyze, separate the information into components. So we should separate the information under the financial statement. How much worth of the asset we have? Asset mean anything we own, it is called asset. Then we have asset, two types of asset. Asset is a current asset and the non-current. Any asset which we can use more than a year is called non-current asset. Any asset which we can use a year is called current asset. So which we can separate into if you want to analyze it. Review, survey, information, method, outcome, conclusion. Yes, you can conclude, you can decide whether it is effective way or not. So you can review the information which we have, we can review. Assess, offer and reason, judgment of the standard. We look around, the people are following the standard. Standard is good. Is it create the transparencies in accounts or not? So the situation and the skill inform the relevant fact. Okay. Inductive content. What we supposed to be learn? Working knowledge. IFRS, International Financial Reporting Standard for small medium enterprise. Working knowledge of IASB, International Accounting Standard. All this will learn. Okay. First, explain the role of accounting as a mean of analyzing, monitoring, and controlling performance. So accounting will help us to analyze, to monitor, to control. The purpose of requirement, financial record is a legal requirement. It's a tax requirement. It's an internal control. We want to see where we spend money, how much we spend money, our company last year, this year, cash position last year, this year, our asset position, all which we can look few companies' financial statement today lesson as well. Financial recording, which record transaction under double entry, debit and credit. We have day books, cash day books, sale day book, purchase day book, how much sales, how much purchase we have, trial balance where all the ledger we balance, and if you're a bookkeeper you normally work up to the trial balance. From the trial balance we prepare our manual or computerized account. So now you may be heard about Sage software and various other accounting software we can use to prepare the financial record. Okay, requirement of financial reporting is a very important financial reporting requirement for the sole trader, partnership and limited and public limited company should prepare the financial statement. Financial statement overviews not required to prepare accounts. Statement, we need to prepare different sort of statement. Statement financial position, which is also known as a balance sheet. So 4 types of statement we prepare. Statement profit and loss, also known as the income statement, where shows how much income, how much expense we have any particular year. Financial position, it shows how much worth of asset we have, how much worth of liability, how much capital, shares capital, how many shares we issued, how many shares we have sit still, and how much dividend we. So cash flow, it shows how much money in and out from the business. how much money in and out from the business, that shows in the cash flows. Cash flows have three major sections: operating activities, financing activities, and investing activities, which we'll go through. All these whose use is a stakeholders. Some stakeholders can be internal stakeholders, some stakeholders can be external stakeholders. And one other statement is called statement of chain in equity, shareholder statement, which says how many shares we issued, which we'll look now, and we'll go through few company statements. Okay. When we're looking accounting, you can be a management accountant or you can be a financial accountant. So management is a internal. The purpose is that planning and control. Legal it's no require you maintain the management. If you have a SEMA qualification, Chartered Institute of Management Accounting, that's your management account. Financial accountant is mean external. It's a compulsory for company to prepare four types of financial statement: statement of profit and loss, statement of financial position, statement of cash flow, and statement of chain in equity. Equity mean the share, how many shares we issue during the year. All this limited company must be produced financial account format, and we should follow the format financial reporting and the company law. Nature of the information, it can be financial and known, mostly the financial under the financial accounting. Time period is a historical and forward looking, but in financial accounting all historical. Every 12 months we must produce financial statement. So accounting concept of two elements: recording. Transaction must be recorded as they occur in according to provide up-to-date information for management. Summarizing all the transaction, we need to summarize the information: how much worth of asset, how much worth of receivable, how much worth of payable. So all this financial statements, it can be income statement, it can be balance sheet, which also known as statement of financial position. Other can be statement of cash flow and statement of chain in equity. Total four statements. So accounting, what's come in your mind? Accounting, how we can define accounting? So just think about accounting is meant by keeping a financial record up to date and preparation of the financial record and the statement about an organization. It includes recording business transaction in a money term, recording financial information, the owner and the managers and other interested parties, mean other stakeholders like employees, like supplier, like HMRC, like local council can use your statement to make the decisions. Advising the owner how to use financial reports to assess past performance of the business and make decisions for future. It provides is a process of identifying accounts, measuring and communicating financial information to permit informed judgment and decisions by the user of financial information. Okay. Company keep record. If they keep record for internal control. R record provide record keeping provide checking the procedure of all transactions. There no fraud. If we don't, it's also prevent of fraud. If we have a financial information, if we have a financial statement, customer query can be addressed. We can prepare for account from these. And what are the key things? Transaction, cash sale. So sales is a one transaction. Credit sales is the one transaction. Salary return is a one transaction. We record primary document like sale invoices, purchase invoices, credit note, vouchers. All these are the primary document. Book of prime entry, where we record our transaction, is called book of prime entry, like the sale day book, purchase day book. Other called journal ledgers, like trade receivable accounts, that can be a sale ledger control account, which we can call receivable. Anybody any question? Okay, next now we're looking statement of financial position, which shows the asset, liabilities, and capital. If you want to see, is a snapshot of business last period transactions. And profit and loss, it shows this period as well. This period only profit and loss, how much expense, how much worth. So it shows sales, how much worth of the goods we sold, or we call turnover or the revenue, and how much cost us. So sales minus cost of sales equal to gross profit. Then we minus other expenses from gross profit. So we get the profit for the year. Okay, we can look around now some companies' financial statement. So let's, please, what you can do, hope so you can see as well. So you can copy this link. So we're looking two supermarket in UK, Tesco, and other is Morrison. So these are two big supermarkets. Those sell consumer goods. So we'll see there. If you type here, it's called income. Is a given here group income statement on page 92. Yes, I can type the word income statement. That system will take me where the word income statement been. You will see there that this year, and we can compare two companies, and that will help. So it will be in this, the structure of the statement is look like this. So revenue will come first. So if you look 2018 and 19, this company, how much revenue? We have a 63911 million, and the previous year was 57,493. So just you look the final column, the figures. Then the cost, how much cost the goods we sold, and that's our gross profit. Then we have operating profit, which is we minus other expenses. Then we minus interest cost. Then we minus the tax which we paid. Then we final figure is 1303. Thus we have the profit which we can distribute to shareholders. Some profit we distributed to the shareholders, and that's the shares we paid 13 pence per share. That's a dividend. So last year we paid 14 pence. So that will help us to that for the record to measure the performance and the dividend, and the user can be used. Then the next statement we call financial position or balance sheet. You will see how much worth of the asset. Non-current asset mean long-term asset, the asset which we can use more than a year. So we'll see last year figures, this year figures total. How much property, plant, equipment, buildings we have. So is increased. We look around the current asset, the asset which we can use a year, or their figures carry on changing within a year. So we'll see their last year, this is a bit dropped now. And then we can see current liability, how much liability we have, which we're supposed to settle within a year. That's called current or short-term liabilities. Then we have a non-current liability that's called long-term liability, which we need to pay, like bank loan, mortgage. And total asset minus liability equal to net asset. Like if you have a house, 100,000, 50,000, you paid it. It means 50,000 you have a liability. So 100,000 minus 50,000, your net asset, your investment in the house is a 50,000. That's equal to your capital. So that's my net asset. That's my capital figures as well. So capital always consists of share capital, how much worth of the shares we issued based on the face value. Then share premium, if we issue the shares more than the face value, the value is written. If it's a 10 pound worth of the share, we issuing 15 pounds. So 10 pound will be times by how many shares we're issuing for 100 shares, so times by 10. So we can look around, is a £1,000 worth of the shares, and if we are issuing 15 pounds, so £5 will be share premium. Okay, that will be share premium. We can look around, and then we can look around how much is the return earning, or any revaluation in our asset will happen during the year, like the asset value increase, property, plant, equipment. And if we have some, maybe we have a lot of subsidiary company that's called non-controlling interest, we don't really have a concern with it. Okay, thus we have a net, and net asset always equal to our capital figures. Anybody, any question? Okay, then we look next now, equity statement. Equity statement shows how much worth of the shares we issued during the year, what's happened. So you can see in different currencies slightly, because it's a quite big company last year, this year, and you can find the final figures. Even you can find how much dividend they have paid. 357 million dividend this year. So that will help us to be look around, this company and how many shares we have. Then the last not least is the statement is called cash flow statement. Cash flow statement is how much cash operating activities are normal business as our normal operation. So how much cash we generate, we can compare 2 years net cash, from the operating activity. So that was this year cash balance drop. Last year was 2805 million, and now we have a 1966 million positive cash balance. And then we look under investing activity, either we invest more cash. Yes, if you look there, the cash last year was positive 643. No, we have invested in property, plant, equipment, or non-current asset long term. We bought more, or maybe we opened the more store, the cash went out from the business. Financing activity, we need to look around. The last year cash was negative. This year cash is negative, is a less now because we settled some liability and now we have less cash negative in. So overall, how much cash we have under, because we add this operating, we look around investing, and we look around financing, and what net cash flow we have from end of the year. The cash we have is a positive balance 2916, but the last year was 4059 million. So it's a huge difference last year. This year we can investigate, and that will provide us information, and the stakeholders can make a lot of decisions based on these financial statements. Guys, you can look around other as well, Morrison, and you can compare. Any question? Okay, that was all about explain, and which we explained. So next is the analyze. What is we need to look around? What is meant by conceptual framework? A regulatory framework for preparation financial statement is necessary for a number of reasons to ensure the needs of the user financial statement are met. That's why we have a standard to ensure the information provided is relevant, it's right, it's true, it's comparable, it's consistent. Last year, this year figures consistent. We prepare right to left, and every 12 months we provide consistent. Give growth, multinational company, global investment, and all to increase the user confidence. If we have a standard, if we regulate is the behavior of the company and direct it towards their investors. So financial reporting standard on not is a sufficient to achieve these aims. In addition, there must be a legal and market-based regulation like stock exchange and investigation why share price will drop. There are the many elements of regulatory environment accounting. The typical regulatory structure include the national financing reporting standard, national laws, market regulation, and security exchange. So conceptual framework can be based on the national financial reporting standard. It can be international reporting standard as well. National laws, market regulation, security exchange. So UK has own national reporting standard, accounting standard board, ASB, part of Financial Reporting Council, and issue the Financial Reporting Standard, FRS, Financial Reporting Standard. Then the Company Act we follow. However, also other pieces of the UK and EU and the US legislation, such as it's called Corporate Governance Reporting Standard, which we follow. And there are also numerous industry-specific system and regulatory framework. Okay, so now we look at some accounting standard of the set of the rules which are prescribed the method once financial statement we prepare and present it, like which I showed you. So the sale first, cost of sale, then gross profit. UK standard is called Statement of Standard Accounting Practices, SSAPs. FRS is called Financial Reporting Standard. If we're looking the worldwide, one same standard, same layout throughout the world is called IES. IES 1 is called International Accounting Standard 1, which we prepare the financial statement. IFRS is called International Financial Reporting Standard. So in a relevant standard for accounting and preparation and preparing the financial statement can be other IAS 16, International Accounting Standard 16, about property, plant, equipment. How much depreciation asset we need to be, which method of depreciation we can use, how we can present our non-current asset, IES2 is about inventory. Inventory have three types. Work in progress. If you open your fridge, in your fridge you have three types of inventory. Work in progress, half cooked meal is in progress. Raw material, meat is a raw material, and finished good, maybe you already make the things and you just vomit eat it. That's your final goods. So if you have a Windows 98 CDs in your warehouse, you bought it 10 years ago, 15 or 20 years ago, that may be 200 pound worth of, and still in your statement is showing you have the CDs worth of, let's assume 100,000 pounds. But now the 100,000 pound worth of the CD, no one is going to buy 100,000. I should reduce the inventory value according to, maybe now is people buy only £5 per CD now, so I can reduce the inventory. I should tell the truth to the people. What is the real value of the asset which I have? I hold it. How much worth of my company? UK and worldwide standard are broadly similar with the difference in terminology. Any question? One of our awarding body are the qualification AAT. They also follow IFRS terminology. Okay. So next we're looking now 1.3, where we review the accounting concept and the principle used within preparing the financial. So first, accounting concept. What is meant by concept are the exemptions underlying the financial statement. The most important concept, going concern and accrual. Going concern. If you're a debtor, you're giving the view that this company is a going concern. It means this company will carry on operating at the same level for unforeseen future, at least 12 months. To assume the business will continue to operate into the foreseeable future as its current level of activity. So that's called accounting, that's called going concern. Accrual mean the income and expenses should be Raj is also known as a matching concept. Each year income and expenditure should be recorded in the years in the statement of profit and loss. Any question? We not record the transaction on the basis of just cash. So like we paid the accounting, let's say example is the previous years. So you paid the gas electricity bill on 1st January. Our year start 1st January and the year finish on the 31st January. Tax year is the year when we have, so tax year can be 1st April till 31st March in the UK. In other countries can be different, starting like 1st July till 30th June. Accrual concept is energy bill we received in December, but we paid it in January. So, but that bill was, the period is up to 31st December 2017. So we should record in that. Even we'll make the payment later date because that's the energy we consume. That's the expense related to the year and should be matched in the year's income and expense. Okay, prudence, like the income. Prudence is the uncertainty. The amount included in the account must be prudent. There are the chances we'll receive it. The asset and the income not overstated. You maybe heard about creative account. People overstate the figure. Oh no, my property worth is 2 million. Actually, is maybe less now. Yes, so we should represent assets and liabilities and the income accordingly. Prudence means the most cautious amount is used, not to, because it can be on the scale, it can be market value 1 million, it can be people. So you show the least amount, not most amount. So the loss is unforeseen. It should be accounted using estimates. So consistency. So financial statements should be consistent and comparable. Same presentation and classification should be applied one period to another period. Then we have other qualitative characteristics, two fundamental accounting characteristics: relevance and faithful representation. Relevant financial information can be economic decision of user. So materiality item, the item of significance should be shown. If you worth of 20 million company and you miss 10 pound worth of transaction, then it's not a material. But if you miss the £1,000,000, like a Tesco, their profit was 180 million, but they showed 220 million. So this is a fraudulence, this is a material mistakes. Yes. So that's a materiality that can be influence on the user to invest in this company. So we need to be very careful. Faithful representation, financial information must be free from material error. So all the material should be represent true information in our account. Comparability is a consistent last year, this year, right to left. Asset shows first, liability shows after. So all this, we need to look around. Understandability. Those people have a basic accounting knowledge that should be understandable, the information. Verifiability. Whatever I'm saying, I'm not saying, I have an asset, I should say asset, but the asset should be in my control, is not someone else control it. So faithful representation. Timeline, every 12 months we need to be. It's not mean after 12 months, last 2 years, I'll publish in record now. It should be within 90 days max. We should publish the information on the public domain. Okay, next we're looking the last are M1, which is the merit, the criteria if you want to assess the important, accurate, applying accounting concept and principle. So what those are: regulatory and conceptual framework. ISB, International Accounting Standard Board, they promote the accounting standard. SAC is a standard setting. It's a committee basically. Those set the accounting standard. IFRS is the International Financial Reporting Conduct Committee. And then conceptual framework is a framework for preparation presentation of account. Other accounting going concern, like we discussed, accrual, consistency, materiality, substance, our form, all the prudence things need to be shown in. So objective of these aim to provide the information, financial position, and the performance of entity mean organization. Historical figures, yes, it can be advantages and disadvantages as well. It's a past history. Qualitative characteristic we discuss is need to be relevant, reliable, comparable, and understandable. The need regulation ensure that the accounts are sufficient, reliable, useful, and prepared without necessary delays. Financial accounts are used stating point and calculating the taxable profit. Annual accounts and the accounts aim to documenting and reporting to the shareholder about the condition and the performance in the stock exchange, the share prices, and all. This will help uh, the user to make the right decision. Anybody, any question? Okay, next we're looking IAS is called International Accounting Standard Board, is part of International Accounting Standard Committee, then Standard Advisory Council, SAC, then we have an International Financial Reporting Interpretation Committee, the interpret, the standard are. IS is the supervisory body. Its objective to develop public interest always. ISB is the International Accounting Standard. They based on the reporting and they set the new standard. SAC, of course, is the Standard Advisory Council. They advise the ISB in developing new standards. Okay. Conceptual framework is the preparation and presentation of financial statement. Earlier we discussed IESB is International Accounting Standard, IES is International Accounting Standard, IFRS International Financial Reporting Standard. How we report, how we present, how we record. The framework deal objective of financial is qualitative characteristic. We discuss comparability, viability, reliability. All this, we discuss in the previous learning. So please, that's we need to be. Of course, you're not going to be take exam, but it need to be good understanding when you prepare the assignment. So what I did, I copied the link for you to be how we can prepare the financial statement. So what we can do, we can copy this link and we can watch this about financial statement, how we can prepare and why we are preparing it. Okay, so we quickly can watch. Yes.
Teammates not clear on work responsibilities.
Okay.
In this business topic video, we're going to introduce what several.
So you will see their income statement, balance sheet, cash flows, and it shows what is about. Yes, each statement, what shows revenue each year in the income, cost. Yes, like earlier we discussed and we've seen, and that's the it's Apple. Yes, how much is, and then we can look around.
See, finance income method, profit nominal part of the income statement.
So this is what the income statement. Huh? So we can watch even balance sheet. The next automatically will play as well. The link, the balance sheet shows,
Hi there.
and you will see the
Day of a month or the financial
yes, the financial position, how much non-current asset, current asset, what is meant by is example as well. Yes,
Now those are positive.
what is meant by trade receivable. Yes.
Not yet used some other kind of measure of profit, but of a balance sheet.
Okay, so please, it's good to be watch these, and those will help you to be develop your understanding. And the next we copied the link for you is the quiz. Yes. So income statement, how we can prepare, what it shows. So please, you can play this quiz and you answer, like for suppose I'm just ticking the boxes so you can see is wrong. At the end will show you all the answers. Huh? So please, yes, go through these, will help you to develop understanding about the income statement, what is meant by profit and loss account. So that's all today. So today lesson we learn about uh, our LO1, and LO1 was about understand the regulatory framework, wise and reporting, what type of financial statement we prepare, why we need to be prepared. All this, we learn in during this lesson. Anybody, any question? Okay. So guys, if you have any question, if you're listening this recording, please drop me email on my email address, and I hope speak with you all in during our next lesson. Thanks for attending. Thank you. Bye bye.